And welcome into Market Talk for this Thursday, February 3rd. Thank you so much for joining us. Our final day here at the NCBA Trade Show and Cattle Industry Convention in Houston, Texas. Thanks for joining us once again. I'm your host, Jesse Allen. Find us online. MarketTalkAg.com is our home on the web. All of our social media links, streaming sources are there. You can find us on Spotify, Apple Podcasts, so many more. And you can also find the latest news of agriculture, market information, everything. One-stop shop. It is markettalkag.com. Well, we had a very interesting trade here today, really volatile trade since the overnight session. We just kind of grinded in these grain and livestock markets on Thursday. Here to join us and talk us through what we saw on the trade today. Got a new guest on the show, DuWayne Bosse with Bolt Marketing, joining us here today. DuWayne, appreciate the time, sir. Thank you for joining us here on Market Talk.
Hey, yeah, no, thanks for having me.
Well, DuWayne, let's dive right into these markets today. And, we saw a lot of money flow earlier this week into commodities. We saw sharply higher trade. We moved soybeans into this 1540, 1550 range in the front months. I mean, corn moving along with beans a little bit there. And then the last couple of days, we started to feel a little overbought, it seems to me, in these markets. I mean, talk us through what you saw here on Thursday. It was volatile and we just kind of grinded around here.
We did. It was crazy. It kind of made me laugh to see soybeans close around steady money today because early this morning we were starting to go lower. And I think you hit the key. A word I used a lot today was overbought. Soybeans are overbought. They're due for a correction. And I thought, here we come. And then we get the good export sales around 7:30, both old and new crop. And then daily sales announcements, and you think, yep, here we go again. That fun buying comes into the soybean market, rallies us back up during the midday. But boy, just midday, like you said, we'd be lower for a couple minutes, we'd be higher for a few minutes, and we settled around unchanged. So I guess at the end of the day, neither the bulls or bears won in the soybean market, but I can't help but think it's fun. I'm generally bullish commodities, but I feel like this market's a little overdone. We need a correction, and a correction is a good thing in a long-term bull market anyway.
Very, very true. Well, and of course, South American weather is at the forefront of a lot of traders' minds right now. And this almost felt reminiscent of a summer weather market today, just with how volatile it was. And, nothing's really changed with that weather picture in South America. And we're watching that on the soy market, on the corn front as well, to an extent. And you mentioned export sales. I mean, good for, bean decent for corn, too. I mean, it was. We look at this core market, that was our downside leader today, not by much. I mean, just it feels like the trade is looking for a new news item to move in here.
Yeah, I think you're right there. We got up to the 640 contract highs, right? So we're up to that resistance levels, and we're looking for that big bullish news to push us through that, hoping we'd get it in, some export sales, like a new sales announcement. Instead, today, we actually got a cancellation from China, 380 million metric ton cancellation. So that was a bit of a bummer. I'll admit the conspiracy theory in me looked right away, went 380. That looks familiar. Well, that was the number that China bought the day prior of soybeans. So I almost kind of waited for like a 10 o'clock announcement from USDA that they screwed up something and it was a soybean, not a corn cancellation, but didn't get that. We'll see. So I'll put that conspiracy theory to bed and just be, okay, China canceled some corn, but that's a surprise to me. South America weather, if it's bullish for soybeans, it's also bullish for corn. And really, you think of the second crop, safrinha crop there in Brazil, we're just getting started into that weather market. So if you ask me, this is China making a cancellation, trying to get the prices a little bit lower before they probably buy some more. Now, that being said, we also had this week a U.S. attaché in China reduce the amount of imports they think China is going to have for corn. They're dropped it down to 20 million metric ton versus the 26 USDA is at. And then China, they always say they're going to raise a big crop, but they think their crop is 11 million metric ton larger in size than last year. So they're doing everything today to make it sound like they don't need our corn, but I don't know if I believe them, Jesse.
I would agree with you. I was going to bring that up with the attaché, and you mentioned that China corn crop. But sometimes we know those numbers coming from China, they can vary. They could change a little bit. But if I'm a producer here this week, I'm looking at these markets. I'm looking at a little bit of profit taking correction here on the quartered soybean side, but we still have impressive levels here, DuWayne. I mean, what am I doing as a producer? Am I locking in a floor, giving me room to run higher so I protect my downside risk? I mean, what are some things you'd advise with the quartered soybean markets here as we wrap up the week?
It's a case by case deal, and it depends on the client that calls me because as a risk manager, I'm supposed to look at a spreadsheet and say, you're making great money here. We need to protect it. As a trader, I got to say, I look at this and still feel like that corn market has more to go. So I guess it depends on the risk level for a client. If it's an older client that has got money in the bank, let's say, and he likes to get the high at the market, I'm going to tell him to hold off. New producer, this is his first year. I'm telling him, you sell this, you take this money, and you're farming next year. So sorry to be so politician-like there with that answer, but that's kind of the way I am. I'm pretty bulled up this corn market. I think we got an acreage battle in front of us. I think it's going to be a fun time this spring, I guess.
Well, and to talk about that, I know you're farmers well there in South Dakota, and I mean that acreage battle is ramping up. I mean, when you talk soybeans 1540, 1550, $14 new crop beans, that's
Right.
gonna really, and plus with high input costs, that's really gonna make some guys start to think maybe I should grow some more soybeans versus corn here this year. I mean,
Right.
talk about that acreage battle. What are you hearing from fellow farmers in your region?
Well, I think a good example is what I did on my farm then. So we sold on this last rally, we sold our old crop soybeans, all but this one bin that we're still hauling out of. It felt like I did a good job weighted. Of course, seems like it was 1 week too soon, right? Rallies $1.25. But because we're already talking acreage battle and the fact that if Brazil has a smaller crop, China's going to buy more of our exports for new crop, that made this new crop rally up to this $14 level you mentioned. So what did I do on my farm? I actually went out and finally made my first sales for 2022 of soybeans. So if guys are doing that in the Dakotas, that probably means less corn or for sure less spring wheat acres. And in my presentations this winter, I've really harped on people that I don't understand or see how these acres are going to work out. Cotton's not going to give anything up. Corn, we always like to plant corn. But between corn, soybeans, and spring wheat, one of those three is going to lose out on this acreage battle. And right now, it looks like spring wheat is going to lose the battle. So I'm just letting the market tell me what to do. This rally in soybeans is telling me go ahead and sell some new crops soybeans here. Don't sell any spring wheat, and I'm not selling any corn yet either.
Well, that's very interesting. You mentioned that about spring wheat, and I want to talk about the wheat markets here next. And let's just kind of stay on this topic. I mean, you think about spring wheat,
Right.
the rough year we had last year throughout the northern plains with drought. You look at price levels for spring wheat. I mean, sitting pretty good still, but yet you seem to think that spring wheat might lose out there. So, talk a little bit more about that and some of your thinking there.
Right. So, there's nothing wrong with an 870 new crop spring wheat price unless you have $14 beans. There's my problem. It's the ratio between the two. You go into North Dakota, and we were, of course, horribly dry last year. And they got some moisture this fall, and actually some decent snowpack in the eastern part of North Dakota. The western part, not so much. There is going to be a decent amount of guys that will plant spring wheat no matter what because of they're still scared about the drought. They're going to go and plant it, assume if we can get some spring rains, that's going to be better off than corn or soybeans. But the swing areas is in the eastern part of the state, and you get further south down by me. And right now, with our crop insurance policies, it's telling me don't mess with the spring wheat. Just stick with your corn and soybeans because I'm already guaranteed that money. And I mentioned the snowpack. Now, that's something that we haven't talked about yet in this whole acreage battle. Last year, prevent plant was down to near a record low of 1.5 million. Normally, we're around 4.3 million. You kind of see what I'm getting at here. If you go up to Grand Forks or Fargo, North Dakota right now, you're going to see an awful lot of snow. Prevent plant is going to be in the window here again. And I just got done talking to you in the last segment, the question about, I don't know where we're going to come up with enough acres. If we get wet this spring, we got a whole nother deal to deal with here. And that spring wheat acres might not get planted. And then they're going to ask this guy. I wouldn't be surprised to see September spring wheat trade up to 1050 for the new crop, just to guarantee those acres get planted. Because we're going to have to get farmers to go out and plant it instead of unhooking that pin and taking prevent plant, which is going to be very appealing when we're setting spring prices at these levels this month.
Very, very true. I know as well as we look at the Chicago and Kansas City wheat markets, we've seen dryness in the southwestern plains quite a bit here recently. And obviously, with all three wheat markets, we're watching the geopolitical issues with Russia, Ukraine, maybe a little bit of easing of tensions there. What's your thoughts with the other wheat classes here and just what we're seeing there in general?
Yeah, in the short term, I'm actually a seller of that Chicago wheat market today. When I think about the wheat market in a vacuum trading by itself, Chicago wheat ran up on this Russia news. in Ukraine. And now, or at least for now, it doesn't look like they're going to be invading. So that feels like we should take that premium off. We've had plenty of rain and snow cover for the Eastern Corn Belt, which is a lot of the soft wheats, the Chicago wheats. There is drought talk in the Southern Plains, of course, along Kansas, Oklahoma, but they got some snow cover this week, a little bit anyway. At least they got some moisture. So I feel like we need to take a little premium out of this market for now. But, later on we'll see. But yeah, a lot of that crop looks good. Southern Plains, not so much. But yeah, a little bearish short term, and then Minneapolis wheat will grind that higher in the spring is my thought.
Well, DuWayne, let's talk livestock here today. What happened in this cattle and hog market? We were trading up moderately all session. Then about 12:30, 12:45, near the close, we just fell apart, it seemed. What did you see in livestock that turned us to the downside here today?
Yeah, it's almost like just profit taking kicked in there too, because we actually had good news. And sometimes, these futures rallies do top on the best news. And we finally got confirmation of some 140 cash cattle trade in Kansas. It was 140 earlier in the week in Nebraska. That's $3 to $4 higher than last week. And we needed it after the futures market rallied that far. Remember, February will go into delivery Monday night. So with the big rally we've had in February live cattle, it felt like the cash market has to come up or the futures has got to go down. But no, we did have the cash market come up, and it's almost like we got that announcement that it's there, and the bulls went, okay, I got nothing else to throw at this market, so I'm just going to take my profits here. I wouldn't say it's a bearish setup. I don't think it has to pull lower. We got the inventory report last week that showed 2% less cattle. I think that's really showing in the deferred feeder cattle contracts. So I'm not saying I'm a bear, but we maybe ran at our bullish course for right now. Cutouts, of course, are slipping. So the Packers are going to try to use that as, they're not making as much money, but that's probably a far cry. So can we justify 150 April fats? I think we can. I think it might take a couple weeks to get there.
Well, and it's interesting as well. You mentioned 150 April fats. We're seeing some of these 170s, 180s on the feeder cattle market. And you mentioned the cash trade this week. I mean, I've heard some people, they're in the camp that we can go way higher. We could talk $200 feeder cattle. And to me, I think I'm with you. I think we're maybe we have some room yet. There's some bullish momentum maybe here still, but it's going to take a little bit, DuWayne.
Yeah, exactly. I'm looking at that feeder board, especially when I get out further to August and deferred months. So, next November. So really next year's calves. The calves are the guys that are starting to calve out here pretty soon. And I'm pushing some hedges on those guys, some LRP insurance, something like, it's levels we haven't seen in a long time, in a few years. But of course, remember, I'm the bullish guy in corn. And if corn's going to stay between $6 and $7 for this spring, well, then it really sounds odd for feeders to be that high price. I understand fats being a high price corn equals high price fats, but feeders, man, that's a pretty tall tale. So yeah, I'm like you. I think I'll be wrong for a while by putting some hedges on here. But if I'm buying puts and selling LRP insurance, it's one of those, I hope I'm wrong, but I don't know. These are levels we haven't seen for a while. Guys are selling calves this year and are fairly happy with the price. And I'm telling them I can protect you for $10 higher next year. And they're pretty much saying, where do I sign on the line, and doing it, which is a good thing.
Definitely. Hog markets, we're watching a hog market really move higher, $100 summer hogs. But you see that spread between that February contract and some of these summer months and cash and everything else. What are your thoughts in this hog market right now?
Wild is my thoughts there on that market. It's just berserk and maybe a little bit hard to trade. But for producers, we did see June hit 110 today. And of course, then pulled off pretty hard into the close. So it looks like a little topping action, but every time somebody's tried to call a topping action in this hog market, it's made a new leg higher. I think it goes back to the hog and pig reports, to be honest with you. 4% less herd than we've anticipated the last two reports. That's a big deal. And it's finally starting to show on the cash market side of things. Daily, the cash hog announcements, I mean, you saw up $14 one day. That's probably a pinch where a packer just needs some locally right now to get through. And maybe the storm kind of pushed some of that. So that probably got the market fired up, and now people are backing off. So that's why we had maybe a lower close. But tough market to trade, violent. But overall, it's still the cheaper meat in the supermarkets. And I think we can support these higher prices but the futures has got such a premium to the cash market right now. We're talking like a $12 premium in April compared to it's usually like a $280 premium right now. So that's a little overdone. You need to see the cutouts in the cash market continue to trade higher just to keep the futures markets where it's at. And I think that's probably what we do is probably should trade sideways here for a while. I know the hogs, they're not going to trade sideways, but to me, that's what they should do for a while. So I can't say I'm a bull or a bear. I'm just watching with my eyes wide open going, wow, I'm glad I'm not in that market usually.
Well, we didn't touch much at all on outside markets. I know crude oil breaking that $90 mark barrel here today. I know the tech sector stocks have been under a lot of fire on Thursday. Before we run out of time, any thoughts there or any other final thoughts you have for us, DuWayne?
No, that crude oil market, I'm watching that a lot. Plenty of clients that would like to be long. And, earlier in the morning, it looked like we had made a top and we're going to trade lower. In fact, we made a lower low than before. It looked like a key reversal. But now this afternoon, like you said, we're up almost $2 again. So kind of on fire, but it scares me just a little bit. I don't like the ethanol stocks being so high in that market. And the Dow, if we think it's been volatile the last 4 or 5 years, this year it's going to be nuts. I mean, with interest rates going up, how many times it goes up, it's going to be volatile. I think you can probably do a little bit of when it drops 600, you can probably buy it and get out the next day when it rallies back, because you're just going to see volatility like that more often.
Well, DuWayne, I really enjoyed our chat today and appreciate the time. If folks want to reach out to you, get a little bit of marketing advice, I know they can find you online very easily. What are the ways they can get a hold of you?
Yeah, probably the easiest way. They can just give us a call here directly, 605-448-2365. Or like you said, they can check us out online at boltmarketingllc.com.
With that, DuWayne Bosse with Bolt Marketing, I appreciate you joining us here on Market Talk today. We'll have to have you back on again real soon, sir. Enjoy the rest of your afternoon. Thanks so much.
Sounds good. Thank you.
DuWayne Bosse with Bolt Marketing joining us here today on Market Talk. Find us online, markettalkag.com. That's going to do it for the Thursday, February 3rd edition of the show. I'm Jesse Allen. Have a great afternoon.